Hello and welcome to Crystal Ratings podcast on the hosiery segment. I shall be discussing the outlook on the hosiery sector, which includes garments such as stockings, socks, undergarments, and knitted t-shirts made from cotton yarn. The hosiery sector in India generated close to 30,000 crore revenue in fiscal 23, out of which 90% came from the domestic market, while 10% came from exports. Urban and rural segments contribute almost equally to the domestic demand. Rural demand had shrunk last fiscal due to rising inflation and lower farmer income, while urban demand remained stable. Volumes dropped almost 30% on year in fiscal 23. Sectoral revenues, however, dipped just 20% as hosiery makers increased the prices at consumer end. This fiscal, the outlook for the revenues is much better, as probable inflation moderation should boost rural demand. Hence, volumes will recover by 35 to 40%. Had it not been for the 15 to 17% fall in realizations, revenue growth would have been higher than the current estimates of 18 to 20%. Revenues will reach around 36,000 crore in fiscal 24. An important point to note here is the potential export opportunities through the Comprehensive Economic Partnership Agreement (CEPA) signed by the Indian government with the UAE, which could improve exports by 2 to 3% over the medium term. Moving on to the operating margin for these players, margins had shrunk 250 bips last fiscal on rising costs, muted demand, and higher advertisement spends. This fiscal, despite input prices moderating, entire benefit has not been passed on, while a strong demand pull has allowed curtailing advertisement and marketing spends. Hence, operating margin will improve to about 12 to 14% this fiscal. Hosiery companies are not expected to take up significant capacity expansion this year, and hence addition of long-term debt will be minimal. Also, strong cash flows will be sufficient to meet incremental working capital requirement and keep overall debt in check. Subsequently, leverage and debt protection metrics will improve, which will alleviate pressure on the credit risk profiles seen last fiscal. That said, erratic rainfall or inflation could dampen rural sentiment and remain key downside risks, while higher exports may support the growth and margins further. Thank you for listening and goodbye.